Hi everyone. Operating leverage. Yes, this is the topic that we are discussing today. Leverage is a word that originated in physics and it sooner got introduced into the world of finance. And probably it is one of the most interesting and most fascinating topics in the financial world today. Today in this video, we'll discuss the cost structure of a business and we'll try to understand that how operating leverage works. We'll also see that why there are some companies who struggle to be profitable. There are companies on the other hand which show supernormal growth in their profit even though the revenues are not increasing much. What goes behind these companies is the concept of operating leverage. You'll also understand that how, as an investor, we can identify these companies early and make smart and wise financial decisions. So yeah, with this basic introduction, I have a presentation ready for you. So we'll quickly go to the presentation and I hope that you stick through this video till the very end. Discussing the operating leverage in finance. Okay, so what it means, so we'll first understand the concept of physics. In physics, the leverage comes from the principle of the lever. What is a lever? A lever is a rigid bar that pivots around a fixed point called the fulcrum. Okay, so this is a rigid bar and this is the fulcrum. This is called the lever. Now, how this lever works is that in order to lift a heavy weight, you do not need an equal amount of effort. So what you can do is you can lift as heavy weight as 500 kg with as little load as or effort as 50 kg. You might have seen this working in your day-to-day life. One such example is lifting a heavy car. Okay, so in order to lift a heavy car, you do not need to apply too much of effort. You can do so by a very much little effort. So this is what the principle of leverage is. Okay, now in the financial world, the operating leverage works in a similar way. What happens here is that the lever is the cost structure of a company. Okay, and the fulcrum is the fixed cost. So fixed cost in the cost structure of a company will actually tell you how the operating leverage will pan out for the business. So in operating leverage, what happens is that with too little change in the revenue, the profit of the company tends to show significant change. So that is what operating leverage is basically. Now, in order to understand the operating leverage, we'll first see how the relation of profit and revenue is. So the profit for a company is what? It is simply revenue minus the expenses. Expenses by and large are of two types. One are fixed expenses and another are variable expenses. What are fixed expenses? Expenses that are fixed to the company or that are fixed to run the business and they do not change with the revenue. While variable expenses are the expenses that have direct correlation with the revenue of the company. So they increase in line with the revenue. So by this, the profit of a company is nothing but revenue minus the total expenses, which is revenue minus fixed expenses minus variable expenses. So when we are talking about the expenses, there are many expenses that a company or a business can incur. First is the raw material, that is the cost associated with the procurement of the raw material. And second expenses could be the cost of shipping, like when you are you know uh, when either the raw material has to be brought in or the finished product has to be sent to the dealers or the customer. That is the cost associated with the transportation, that is the shipping cost. Then there are sales and marketing cost. You have to pay to the sales team, you have to pay to the marketing, you have to pay for the advertisement. So that is there is some cost associated with these events. So these are called as sales and marketing costs. Then another type of expense could be electricity and other utilities, water, security, surveillance, electricity. So there are some inherent costs associated with these. Another type of expense could be the rent. So suppose the property that you are owning um, might be on rent, so you have to pay the monthly rent for that. And there is R&D expense. Suppose you are making a product, so there is cost associated with the research and development of the products. Another cost could be the interest cost. Suppose there are, you have borrowed some money from the, institutions in order to run your businesses or meet the working capital requirement of your company. So in that case, there is a inherent interest cost associated with that. Another could be the admin cost. Okay, the administration cost, which is by large fixed in nature. Okay, what else? There are direct salaries to the employees and the technician or the ground staff that is, working directly with the production. Another could be the depreciation. So whatever the plant you have made, okay, so there could be machineries in there. So those machineries might be aging with time. So there is depreciation cost associated with it. You might have building that might be depreciating in value with time. So these are the different costs that are, associated with a company. Now what we have to do is we have to classify these expenses into fixed expenses and variable expenses. Okay, so what are fixed expenses? As I mentioned earlier, these are the expenses that remain by large fixed with the sales. They do not change with the revenue or the sales of the company. What will this include? Rent is typically fixed. Okay, this is not dependent on what revenue you are doing. Another fixed cost or expense is the interest and depreciation. So whatever money you have borrowed from the institution, you have to pay interest on that, whether you do any production or you do any sales or not. That is not the concern. Okay, next, what it is? Depreciation. The values of the asset that you owe, they are depreciating at a fixed rate. Then another fixed expense is the R&D and the admin cost. Okay, these costs are by large the fixed costs because they do not directly affect, the production of the company. Then there are sales and marketing costs. Variable expenses on the other side could include the raw material cost, direct salaries that are paid to the, to the workers or the employees that are directly associated with the production of the product. Then there are other expenses such as electricity and other utilities. So electricity that is being consumed is directly proportional to the, the amount of, or the production that is happening in the company. And then there are shipping and packaging and other costs. So basically, this is how you classify the fixed expenses and the variable expenses. Now, as we mentioned, so suppose a company which is in 20, so I have taken this example where on the y-axis I have the value in crore of rupees. Okay, so this green line is indicating the sales, the black line is indicating the fixed expenses, and the red line is indicating the variable expenses. Okay, so I have plotted this data from 2025 till 2028. So what we are seeing is here is that the revenue of the company is increasing year on year. So it increases from 15 to 20 to 25, then eventually to 30 by 2028. While on the other side, the fixed expenses being fixed in nature, they do not change with the sales or the revenue. So they by large, remain fixed, whereas the variable expenses, they are directly related to the revenue. So as the revenue increase, these variable expenses also increase proportionally. Okay, so now what I have done is that we have combined these two costs. So this is the total expense. So what is total expense? Fixed expense plus the variable expense. So 10 plus 3 13, 10 plus 4 14, 10 plus 5 15, and 10 plus 6 16. So that is what this graph shows. 13, 14, 15, 16. This is the total cost expense for the company for from 2025 till 2028. Okay, and the revenue increases like this. Okay, now if we see, what we do is, what is the profit? Profit is sales minus total expense, right? So here the profit is 2 crores, right? Here the profit is 6 crores, here the profit is 10 crores, and then eventually 14 crores. So this is the graph that shows the revenue growth for the company from 2025 to 2028, and here are the corresponding profit figures. So from 2, 6, 10, eventually 14. So now in tabular form, I have presented that data. So in 2015, the revenue was 15, which increased to 30 crores by 2028. Now, year-on-year revenue growth have been mentioned in this column. So in 2026, the year-on-year growth was 33%. 2027, it was 25%, and 2028, it is 20% for the revenue I'm talking about. And for the profit, we had figures of 2, 6, 10, and 14, right? Profit growth, if we see, so for 2026, it is 200%. So while the revenue growth is 33% only, the profit growth is 200%. For 2027, the revenue growth is 25%, while the profit growth is 66%. 2028, the revenue growth is 20%, however, the profit growth is 40%. So what I am trying to say here is that the profit growth is much more, larger or bigger than the revenue growth, right? So with this, suppose assuming that the company has a total of 1 crore shares, and assuming that this remains constant, so from 2025 to 2028, the profit of the company was 2, 6, 10, 14, okay, crores. अगर हम ईपीएस की बात करेंगे, हाउ डू वी कैलकुलेट ईपीएस? वी कैलकुलेट ईपीएस बाय डिवाइडिंग प्रॉफिट विथ number of shares. तो profit divided by number of shares will give you EPS. तो EPS की अगर हम बात करें, तो for 2025 the EPS was rupees 2, 26 it was rupees 6, 2027 it is rupees 10, and for 2028 it is rupees 40, right? Assuming, क्योंकि because what we have seen just now is that the profit growth has been supernormal, so what will happen is that there will be a fair chance of P re-rating. Okay, so P re-rating. So initially, let's say in 2025, the P of the company was available, or the business was available at a price to earning ratio, that is P ratio of 25. So in that case, the share price would be P multiplied by EPS. EPS was 2, price to earning ratio that at which it was trading is 25. The share price of the company is 50 rupees. In 2026, it went up to 40, then 45, then 50. So there was a period rating. Okay, why it happened? Because there was a super normal growth in the profit of the company. Okay, so because of this, the market actually, they generally tend to reward the share, and for that, right, for that result, we see a P rating happening in those companies. So now the P at the end of 2028, it has grown to 50. The EPS is 14, the share price is 700. So now if we see in just a matter of 3 years, the share price has gone from 50 rupees to 700 rupees. And this is what generally happens. Like, this is not a joke, okay? This is just not for the presentation purpose. I'll just show you a couple of examples, but what I right now want you to understand is that how this concept of operating leverage works, okay, and how it is such a powerful tool, and how if you, and what happens if you can identify this early, and you can bet on your on such companies, and 2, 4, 5 years down the line, you will see extraordinary growth in the in terms of the share value of the company. Now, so this is what happens, right? From the share price, which was initially trading at 50 rupees, and it goes as high as 700. That is more than 10x or 14x increase in the share price in the just matter of 3 or 4 years, right? So now, I so this is okay. So fine. So this is what the concept of operating leverage is. But we'll see how this happens. Okay. So the basic fundamental behind this was this: the fixed cost of the company was too high. Okay. So if we go there to the previous slide, we'll see that the fixed cost of the company was too high. The fixed cost was 10. The variable cost was 3. Variable expense was 3. So there was a huge difference between the fixed cost and the variable cost. So when the cost structure of the company is such that the fixed cost is immensely high compared to the variable cost, okay, such companies offer an advantage of operating leverage. So what happens that in this case, when the difference is too high, the chances of operating leverage is too high. But as we go to 2028, this difference tends to diminish, okay, and that's when the operating leverage will will would have mostly played out. And most investors would see the share price increasing, and will probably increase enter at this point or this point, and when the actual game is over, right? So now what we understand from there is that operating leverage, when it works, is when the fixed cost is very high compared to the variable cost. Okay, so in those companies you see that the profit increase is massive. Okay, there is a massive increase in the profit. Okay, and even though the sales have not increased much, the sales have only doubled in 3 years, but if you see the profit, it has increased by more than 700%. Okay, so just for 100% growth in the profit, sorry, revenue, the profits of the company have increased 700%. And that's why the PE rating is also happening, that is further boosting the share price. So the PE rating re-rating has happened by a factor of 2, and the share EPS has grown by a factor of 7. So 7 multiplied by 2, there is a 14 times increase in the share price. Now, so what we have said is that the fixed structure in the company is too high. So what are those sectors or companies where you can see this phenomenon, or you can see this operating leverage at play? So predominant sectors could be hotel, airlines, and hospitals. Why? Because there is huge fixed cost associated with these companies, because of the rent, staff salaries, fleet management, etc. Right? So if you see the hotel company, there is fixed cost. There has to be rent paid. There is depreciation value, and depreciation happening. There is uh, because these are capital intensive businesses, you might be having a lot of borrowings for which you have to pay the interest. That is also part of the fixed cost. Next, the manufacturing, telecom, and heavy industry. So let's say I'll talk about the manufacturing company. So let's say you have a manufacturing plant, and that is currently operating at 20%. So now you have the cost, revenue very little, but on the other side you have operating these expenses too high. So as so initially you'll be just EBITDA negative or positive with this company, but as the capacity ramps up, your fixed costs are more or less constant. Okay, only the variable costs, which are not that much, they that are present. And as the capacity of the plant ramps up, it is very likely that the profits of the you'll see a significant increase in the profits. And so, so this is kind of companies where you can find the opportunities for operating leverage. Another example is, let's say, telecom. So let's telecom, like company in itself, they are very capital intensive businesses. So like installing that towers, and then buying the spectrum, there is a huge cost associated with it. So as so till that time you do not have sufficient number of customers using your telecom services, you will see that these companies are very much in loss. But what happens when the number of customers increase is that each customer is adding into your profit, because the fixed expenses have been covered. There are no variable expenses, there is a little variable expenses. So what happens is that every customer that you add, it directly contributes into your profits. So telecom companies are also great examples where you can find this operating leverages at play. Then next are IT based or SaaS based companies. So these companies, they have subscription type model for services or products that they offer. So what happens is that they have a huge R&D cost associated with these companies, because of which what happens is that initial cost is very high. Okay, and for that reason, the initial profits, the company might be in loss, or at the operating level, or they might be having very little profits. But what happens as the they ramp up their customer base, so each customer is again directly because the variable, because the fixed expenses are no are mostly covered, and they do not have or very less variable cost. So every revenue that is incremental revenue from the customer that they are adding, it directly flows into their profit statements. So this is also kind of sector where you can see this operating leverage in a great way. Now, have we seen any such companies in the past? Like, so I'll just give you some examples. Okay, so this is the P&L statement of Max Healthcare. So if you see Healthcare, it is a hospital chain. Okay, so in 2020, around 2020, the company had a sales of 2,000 crores approx, and for that sales, the company had a profit of only 90 crores. Okay, why? Because the interest and depreciation costs were too high. Okay, so for this reason, the profit of the company was only 90 crores. Back, and fast forward to 2025, the sales of the company has grown from 200 crores to 7,000 crores, which is roughly a 3.5 times increase. But when you see the, profit of the company, it has grown more than 15 times. Okay, so just for 3 times increase in the profit, revenue, the profit increase in 15 times. So this is the case of the Max Healthcare, and what we saw is that from the level of 100 rupees, the share is already up 1,000 rupees and currently trading at 1,100 rupees. So it is a gain of around 10 times in just 5 years. Another example is of Interglobe Aviation. So that is the company that operates, Indigo. So in 2020, that was the COVID year. Okay, so but the revenue or the sales of the company was 35,000. So this was the sales for the company, and the expenses for the company was 31,000 crores. Okay, so a huge part of this expense was the you know uh, fixed expense. Okay, now fast forward to you know 2025. Okay, so here the company, because of huge interest and depreciation cost and everything, right? So the company turned net in loss, right, in 2020. However, in fast forward to 2025, just the sales double, but what you see in the bottom line is it turned profitable, and profitable in a huge way, that now the profits are at 8,000 crores. So, and same happened in in terms of its share price, which increased from like, which is up more than 4.5 times. Then another example is of Mahindra and Mahindra, right? So back in 2025, okay, the sales of the company were around 75,000 crores, okay, and the operating and the profit uh, for for the year was 1,600 crores. So while there is from 75,000 crores, their revenue have increased to, well, close to 1,50,000 crores, which is a 2 times increase in the revenue. The profit of the company has increased more than 12 times in the past 5 years, right? So just for 2 times the revenue growth, the profits have grown significantly to 12 times, right? So, and the share price was rewarded accordingly by the market. So the share price went approximately 5 times in last 5 years. So this is how this operating leverage works, and I hope that you got to learn something in this video today. So to summarize this video, what we did today is that we learned the concept of operating leverage. We understood the cost structure of a company. We understood that there are some fixed costs and there are some variable costs in a company. Okay, and what we need to do is we need to segregate these fixed costs and the variable costs. And high fixed costs, if it is the fulcrum for the operating leverage. Okay, so when you will have the operating leverage in a company when the fixed costs are very high compared to the variable costs. And what operating leverages do is they that any incremental revenue could take the bottom line significantly higher. Bottom line, that is the profits of the company significantly higher. And what we have also seen is that past examples. I have shown you the example of M&M, Max Healthcare, and Aviation Global. So, and we can use this basically as a potential, information and knowledge for the future investment philosophy. Yeah, with this, I'll keep this video till here, and I hope that you like this video. I hope that you got to learn something today, and if you did, please leave me your honest feedback in the comment section below. I would love to hear your honest feedback. If you have any query, please comment them also in the comment section. एंड अगर आपको लगता है कि ये वीडियो किसी और के काम आ सकता है, आपके फ्रेंड्स या फैमिली में किसी के लिए हेल्पफुल हो सकता है, then please do share this video with your friends and family. And in the end, if you really like the content, please subscribe the channel and stay tuned. Thank you.